Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 23rd through September 27th, where we'll try to help you make money trading in the fallout from the first big rate cut. So thank you again for joining us for part one of our weekly trading game plan for September 23rd through 27th. Let's see how we can make money trading in the fallout from the first big rate cut. So let's get started. So here's our notes for part one of our weekly trading game plan for September 23rd through September 27th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trade ideas for this trading week. We keep all of our Google documents with our weekly trading game plan notes in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as previous weeks. And you can also find a direct link to this Google Drive folder in the description box below. So firstly, we'll go and see how the markets ended up on Friday. And after the fallout from this first big rate cut. So we see on Friday, most of the indices were pretty much flat. The Dow did reach a new all-time high. So the Dow was just slightly positive, 0.09. NASDAQ down 0.36%. S&P down 0.19%. We can see the markets pretty much oscillated most of the day. The reaction to the fallout for the first big rate cut was much dampened on Friday. We saw a pretty dramatic move on Wednesday, a lot of whipsaw action on Wednesday right after the announcement of the rate cut, and then an exuberant reaction to the positive on Thursday, and then a dampening effect on Friday. So you see on Friday, we had 30% advancing, 64% declining, 78%, almost 80% new highs, 20% new lows. We've now got 70% above their 50-day moving average, 30% below. Got 2/3, 67% above their 200-day, and 32% below. So although it shows bearish at the end, we had a big red candles market on close. It was a pretty neutral day overall. Saw rotation back out of the Mag 7. Again, we saw rotation kind of into the Mag 7 on Thursday. Strong technology rebound on Thursday. Profit taking rotation out of the Mag 7, out of technology on Friday. Most of the other sectors were pretty mixed, except communication services and utilities. Again, saw sector rotation in and out of utilities. It's a strong rotation. I think it was on Thursday out of utilities, back in on Friday. Some of the news. Stocks had for the first September gain in 5 years. So we've been talking about seasonality. So this is bucking the seasonal trend that September is typically the worst month of the year. Fed's first rate cut sends already stretched valuations even higher. So exuberance stretching valuations further. S&P ends lower. FedEx, Dow closed at fresh record post-winning week. See, oil broke back up above 70, so now it's got support at 70. So we'll see if that upward trend back in oil continues. Natural gas also broke resistance at 240, so now got kind of support at 240. We'll see if that upward trend continues. And gold's just been a beast, hit a new all-time high again, as we'll see in the futures as well. Right now, all the futures on the indices are pointing down. In my humble opinion, it was a strange behavior in the bond yields. We saw the bond yields actually go up after the rate cut. On Friday, they retraced somewhat, but we also saw a significant steepening in the bond yield curve. So now we've got the 5-year at about 3.48, 10-year at 3.72, and the 4-year back up above 4% at about 4.07. So again, dramatic steepening of the curve. And again, I was a bit surprised it was possibly due to dropping the yields on the short end of the curve. and bull steepening in the long end of the curve. So welcome to Ricky Khan, Ellen Krantz, Katon, trader also known as Easy Mike, Shaka Cthulhu. Thank you all for joining us today. Hope you all had a great trading week and are doing well. So we'll look at a breakdown of the major indices and the technology components. And just a quick reminder, you can also access these screeners and screener sheet in our ETFs and Watchlist Google Sheets, as well as in our notes documents. So we see all the major indices. Again, Dow made a new all-time high, broke out of that channel. So Dow continues to be very strong. IWM, the expected, very positive reaction to the 50 basis point rate cut. So part of the fallout from the first big rate cut is big surge in the IWM. And the Russell, small caps benefit significantly from rate cuts. See a slight retracement back on Friday, but we'll see if that exuberance in small caps continue. Again, the SPY, another new all-time high recently, slight retracement again on Friday. You can see it broke out of that multiple top at 580. So again, we'll see if that retraces, tests that support, and continues upward. Now, above its moving averages, out of that channel. Technology in general, not quite as strong, but the Qs did break above the previous August high. So and broke out of that channel above the moving averages. So again, not as an exuberant reaction in the NASDAQ and the Qs, but it did again break that August high. We'll see if it retests and continues up and retests the July all-time high, or retrace and correct back down to the moving average. We look at a breakdown of the technology components. See again, growth stocks a benefit from the first big rate cut. So we saw exuberant surge in the ARK-K, then retracement, got resistance from that upper trend line, retraced slightly. Well, it looks like it's holding the long-term moving average. Again, we'll see if that holds. Bangs, again, not as an exuberant reaction. We've been talking about maybe the reign of the Magnificent Seven is over. So again, somewhat of on Thursday, we had a little bit of an exuberant rotation back into the Mag 7, and then probably profit-taking rotation back out on Friday. Biotech's another beneficiary of rate cuts, again, mostly money-losing growth companies, and their discounted cash flow is of more value at lower rates. So we saw a surge up out of the channel, retrace back to that channel, and pretty much at its previous high. Hasn't reached the July high yet. So again, a lot of whipsaw action, volatility, but we'll see if it continues to benefit from that first big rate cut. Semiconductors had a brief exuberant pop on Thursday. Again, retrace, pretty much gave most of it back on Friday. Also significant, we see a death cross now on the SOXL. So usually that's a very bearish signal. So we might see a further retracement in semiconductors back down to that support level. So again, semiconductors definitely a weaker segment of the technology in general. Talked about the NASDAQ in general, TQQQ, 3x leverage on the NASDAQ. So pretty much same performance as the NASDAQ. And we see the broader technology sector is not nearly as strong. We didn't get as an exuberant reaction to the rate cut. Did get a little bit of a pop, quickly retraced back to the shorter term moving average. Looks like in the near future, we also might get a death cross on TECL. Again, this is a 3x leverage on the broader technology sector. When we get to our ETFs Google sheet, you can also see the short versions of all of these leveraged technology component ETFs. So I hope that helps. Okay, let me grab a quick drink and we'll go over the sector breakdown, the industries, see if we can see the sector rotation in the fallout from the first big rate cut. Okay, so if we look at the sectors, industries, groups, and the groups tab in FinBiz, again, we see that rebound in utilities on Friday. Again, they had rotated out of utilities on Thursday after the rate cut was announced. Again, somewhat surprising, as utilities should benefit from lower interest rates. We also had that news we'll see in uranium, where Constellation Energy is looking at reopening 3 Mile Island. Some of the other utilities are looking at reopening some of their existing nuclear power plants. So we'll see a strong surge in uranium. We'll talk about some uranium stocks, ETFs, etc. See, energy did relatively well. Utilities, defenses rebounded a little bit. The weakest were industrials, probably profit taking, basic materials, again, rotation back out. So we'll see some pretty significant sector rotations in the fallout of the first big rate cut. Overall for the week, energy was positive, again, oil recovering, uranium rebounding, financials pretty positive. Communication services, utilities, generally positive. The weakest, surprisingly, again, real estate is a beneficiary of lower rates, but we saw bond yields actually go up. So real estate ended up down. And again, it was mostly a risk on after the first big rate cut. So defensives were negative. For the month now, you've got utilities, real estate, again, strongly positive. So again, we may see a further rotation back into real estate if bond yields come back down. Energy slightly negative, technology negative. Again, real estate for the quarter, utilities, energy slightly negative. So if we look at the industry breakdown, again, we see that strong performance in uranium on the Constellation Energy news. Utilities, renewables, so that would be solar, saw a rebound in silver and gold on Friday. Again, utilities, again, Constellation Energy reopening 3 Mile Island, got a big contract with Microsoft to power their data centers. So again, a strong rebound in uranium. Some of the REITs benefited, oil rebounding slightly. Some REITs a little negative, some oil negative. Again, surprising mortgages should benefit, but residential mortgage REITs were down on higher bond yields, copper down, steel down. Trucking, again, FedEx reported poor guidance going forward, so transports, trucking, etc. So watch the transports. If some of the other shipping companies also report negative, transports tend to be a leading sector in the markets, and negative in transports is generally negative for the market. So keep a ear out for those. Again, for the week, rebound in uranium, renewables, utilities, oil, copper generally positive, solar, again, big beneficiary. Anything that needs financing benefits from the first big rate cut, so solar positive. Mortgage REIT slightly positive. Semiconductors negative. Industrial and retail REITs negative. Pharmaceuticals negative. For the month, airlines positive. Travel, utilities, again, uranium. Good rebound in uranium, silver. REITs, so real estate in general. Gold just slightly positive, again, sitting at new all-time highs. Coal negative, semiconductors negative. So I hope that all helps. Okay, next we'll go through the economic data from the past week. I'll go through my notes, and then we can look at the further economic data from last week. Got some notes from the Fed statement, interest rate cut statement, as well as Powell's press conference. Just a quick reminder, as soon as the important economic data comes out, and important economic news. Try to post that as quickly as possible in the Surf the Markets channel of our Discord. Discord's free to join. We'd love to have you join our Discord, actively participate, as well as, again, as the important economic news comes out, important economic data, try to post that as quickly as possible in the Surf the Markets channel in our Discord. So again, we'd love to have you join our Discord, actively participate, help each other make money trading. Let me grab a quick drink and we'll go over the economic data from last week and then look at what we've got coming up for next week. Welcome, Fairchild. Thank you for joining us. Hope you're doing well. So nothing interesting on Monday. Tuesday, this was interesting. We got retail sales. Retail sales for August were better than expected, up 0.1 versus expected to be down 0.2. Year on year, down a little bit. Gas and autos was a little lower than expected, and core was a little lower than expected, but it shows the consumer is still, buying retail. So retail sales for August stronger than expected. So it shows, the consumer, the economy, still not deteriorating significantly. Wednesday, we got the Fed interest rate decision and their strategic economic projections, what's called the SEP or the dot plot. And I think that's even more significant in my humble opinion than their decision. Again, I was slightly surprised by the 50 basis rate cut. I really expected them to do just 25. I'm not sure. I heard their rationale. But again, I was a little bit surprised at that. Again, initially we saw the markets, react very positively and correct somewhat. I didn't hear a lot of concern about recession, etc. But again, I want to look at their projections because I thought this was interesting as well. This is the dot plot, the SEP. So in my humble opinion, again, none of my comments should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. But in addition to starting out with a first big rate cut, it looks like their rate of cutting going forward is steeper than what was previously projected. So a year from, in the current quarter, it's 4.4 versus 5.1 was their previous projection. So we're looking at probably about 2 more rate cuts sometime in this year. So 50 more basis points. Now, I think the current probabilities are for a quarter in November, quarter in December, since we only have 2 more meetings coming. So we expect to get 50 basis points, at least 50 basis points more this year. But then by next year, they had projected 4.1%. Now they're down to 3.4%. So another whole basis point cut or whole interest rate cut, 100 basis points, 1% down in the next year. And it looks like they're reaching their terminal interest rate of 2.9 by the second year. So by 2025, this end of 2025 down to 2.9, and that's essentially their terminal rate, which previously they weren't projecting until the third year. So again, I thought that was interesting. In my humble opinion, it looks like their curve of cutting is steeper than what they had previously projected. So again, not only are they starting out with a bigger rate cut than previously thought, but they're also steepening their rate of rate cuts over the next 2 years. So I hope that helps. So here's some of my comments from the FOMC statement that I captured. Thank you to Fast Stock News for posting these. So I stole those from them. So inflation has made further progress towards 2% objective, remains somewhat elevated. They've gained greater confidence in inflation moving sustainably towards 2%. Judge risk to employment and inflation goals roughly in balance. Again, they'll be data dependent, make decisions on a meeting by meeting basis. Risk in considering additional rate adjustments. Economic outlook is uncertain. Tentative risks on both sides. So again, risks are more balanced. Economic activity expanding at a solid pace. So again, the economy remains resilient. Job gains have slowed. Unemployment rate has moved up but remains low. Quantitative tightening continues at previous pace. And we had one dissent. Governor Bowman preferred a 25 basis points. So it's been pretty rare. It's been a long time since a Fed governor dissented. So we did have a little bit of a dissent. Bowman thought we should have only gone 25. So some of the comments, and then we had the Fed Chair Powell's press conference, and some of the comments I captured from his press conference. Economy is strong overall, so the economy remains resilient. Growing confidence that the strength of the labor market can be maintained. So again, they're not concerned about the labor market deteriorating more rapidly. Longer term inflation expectations appear well anchored. So, and they don't see he didn't see anything in the economy right now that suggests likelihood of a downturn. So there wasn't a lot of discussion about recession. Powell doesn't see potential recession. He didn't. One of the things, in my humble opinion, I was a little disappointed about is he didn't really explain the justification for the 50 basis points versus the 25, other than that they're confident that they're going to hit their 2% inflation target and that they're not concerned that the labor market will deteriorate more rapidly. So, love to hear y'all's opinion on the Fed interest rate decision and the comments that were made as well. Welcome, MD. Thank you for joining us. The Crow. Hope you all are doing well. Had a great week. So then Thursday, we also got jobless claims data. So this was after the Fed decision, but we can see initial claims was below expectations. So Powell's comments that they weren't too concerned about further deterioration. Market seems to be holding up right now. Continuing claims a little below expectations, so people are still finding jobs. So those were both positive from the labor market. 4-week average down a little bit. So again, there are comments that the labor market can be maintained. Seems to be holding up for now. Friday again was quad witching or triple witching options expiration for September. So kind of, again, we just saw some oscillations in the market, not really a strong trend in either direction. And that's the tug of war that we typically see on options expiration. Although, as we'll see, the VIX really, we didn't get a lot of volatility. The VIX at some point actually dropped below 16. So again, we didn't really see a lot of volatility, even though it was the quad witching day. So let me grab a drink and we'll go over the rest of the economic data from last week, look at the economic data for next week. Ellen commented Powell didn't want to upset the apple cart. I agree. In my humble opinion, I think he does a real good job of, it's not scaring people. So I think that was positive. Another just observation is he seemed quite pleased at the 50 basis point decision. I guess I got the word smug a little bit planted in my mind from watching his reaction. So I think he's pleased at the progress they made on inflation, pleased that the job market's not deteriorating. And again, I think he was for the 50 basis point cut. So I thought that was interesting. Got some bond auctions, pretty good on Monday. Again, we talked about retail sales. Industrial production, actually pretty good, better than expected. So again, resilience in the economy. GDP estimate from Atlanta, better than expected. Crude oil stock up, but again, we saw a rebound in oil prices. Mortgage rates down. Again, all that and the rate cut should be good for the housing market, good for home builders, etc. Building permits up. Housing starts better than expected. Again, all this should be good for the housing market, good for home builders. Says inventories were down. But again, we saw a rebound in the oil prices. We talked about the Fed interest rate decision, first big rate cut, and the economic projections. Talked about jobless claims on Thursday. Natural gas storage up a little bit more than expected. But again, we saw natural gas prices headed back up. Baker Hughes rig count, pretty steady. Oil rig count steady. Total rig count slight drop. So not a whole lot of change right now in the rig count. Look at the economic data for next week. We've already got Fed officials starting to talk, so maybe we'll hear further justification for their decision for the 50 basis point rate cut. So again, might provide some volatility, different reasoning for the 50 basis point rate cut. And looks like we're going to have a whole slew of, there's Bowman who preferred the 25 basis point cut. I know she issued a statement on why she preferred that. And I believe you can find that in the Surf the Markets channel, I believe. Housing prices, manufacturing, mortgage rates, building permits. And looks like most of the volatility around the Fed officials talking and jobless claims on Thursday. Then we get PCE data. So again, if that comes out hotter than expected, it might quench the probabilities for a 25 basis point cut in November. But I don't expect that to be as significant. GDP is expected on Thursday, continues to be relatively strong, positive. So again, no concern of recessions. Jobless claims data. We've got a Powell speaking on Thursday, so people will be interested in hearing what further he has to say. Williams, and I think a lot of the volatility is going to be around the Fed officials talking and hearing. Here's Yellen as well. So hearing their justification for the 50 versus the 25. And again, Friday we get PCE and Michigan sentiment. So again, normally these would be volatile events as they would affect the Fed interest rate decisions. But again, in my humble opinion, I think their effects going to be dampened now that we have their SEP, their projections for rate cuts. I think, they're going to cut probably either 25 and 25 the rest of the year as they projected, unless something dramatically changes. So unless this data comes out significantly different than expected. I don't think the market will react as negatively as previous. Again, just my humble opinion. I still have some earnings, but we should be winding down this earnings season, and then we'll be kicking off right into the next earnings season. So you can see who's left. Got some miners, some commodities, etc. So again, you can see who's left to report. AutoZone, auto's been very regular negative. KB Home, so we'll hear a projection going forward. Possibly they'll talk about the effect on rate cuts on home builders, getting some miners, autos, so some autos, home builders, miners, etc. Then again, we'll start all over again and doing another earnings season. So it'll be interesting to hear any comments on the fallout from the first big rate cut from some of these earnings reports, if they comment on how that might impact their business, something to listen for in the guidance going forward. Just a quick reminder, the next FOMC meetings at the beginning of November 6 and 7, and then in December 17, 18, and we don't get another dot plot SEP till December, and that'll be after they've already made their decision for this week. So you can also hear, how we trade around earnings via the link to how to make money when earnings matter. And again, earnings definitely matter, guidance as well, as it'd be interesting to hear the impact of this first big rate cut on earnings going forward. Let me grab a drink and we'll go look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they still offer 75 free fractional shares of stock. They're also still offering up to a 7% interest rate for the first 30 days. Now, again, I don't know how long these bonus promotions will last, as interest rates are going to drop. So take advantage of the high interest rate while you can. I think they even offered a higher bonus very recently. If you open and fund your account with 25K, you get the 75 free fractional shares of stock, 7% interest rate. Under 25K, you get 20 free fractional shares, still a 7% interest rate. And the fractional shares are worth $3,000 to $3,000. And if you'd use our affiliate link in the description box below, you can get all your fractional shares, any other promotions they're offering, and also help support our BeachBum trading community, which we greatly appreciate. I'm using the market screen of the online browser version of Webull. So we typically look at the histogram and the breakdown of advancers and decliners. So on Friday, we can see we had, not quite 2 to 1, but close of decliners to advancers. Percentage of decline was generally quite small. Had a little bit of a balance of small advancers, tails very low. But the net inflow was quite interesting. We had positive net inflow in the NYSE all day on Friday, and a negative and deep declining outflow out of the NASDAQ. So again, probably profit taking net cash outflow out of the NASDAQ. So the past couple of weeks, we've seen some positive behavior in the NASDAQ, and now seeing a pretty strong outflow on Friday. Another thing I wanted to point out, I don't know if I pointed this out previously in Webull, but in addition to looking at the trend of the indices, you can also see the trend in the treasuries. So we talked about that steepening in the treasury curve. So if you want to see real-time market movements in the treasuries, We've got the 1 year, 2 year, and 10 year. So this is quite interesting. At about 11:30, we had a strong drop in the 1 year, and you can see the percent change in the yields. We see the same thing kind of in the 2 year. So big drop. It had been trending upward. We got a big drop around noonish, but it ended up positive, and then the 10. So now we've got a uninverted 2 to 10, but we have an inverted 1 to 10, 1 to 5. So again, you can see the market activity in the treasuries also in the market screen in Webull. So I hope that all helps. Just a quick reminder, you can also see the near-term earnings calendar in the calendar section of the market screen of Webull, and we should be winding down this earnings season, kicking off the next one. Got the best performing industries. We talked about uranium, so we see that strong performance in uranium. LEU, so the top performer, LEU, UUUU, CCJ, and URLY. Again, tomorrow we'll talk about URLY. Software, construction, again, construction. Talked about how the part of the fallout of the first big rate cut is positive for any kind of construction, real estate, etc. Oil and gas, mostly positive. IT, somewhat positive. Real estate, banking, a little positive. Utilities, again, a lot of volatility in utilities this week. Look at the ETFs on Friday. So right now we've got shorts on small caps. So maybe that exuberance in small caps isn't going to continue. So short on the Russell, short on small caps, up on the Dow, and the Dow continues to be very strong. Looks like shorts on mid caps. Talk about small caps, short on NASDAQ. So SQQQ is the leverage short on the NASDAQ. YCS is short on the yen. We'll look at the yen futures. Also talk about the Bank of Japan decision. And short on the Russell and small caps. Industries, uranium, and uranium miners, all strong. URA, URNM, URNJ. We have all those ETFs in our ETF Google Sheets. So again, whichever you prefer. Also, last week we talked about URAX, which is a leveraged 2x leverage long on uranium on URA. So another one you can track in our ETFs Google Sheet. Industrials continue to be relatively strong. Again, utilities, a lot of volatility. Communication services, positive. Real estate, surprisingly negative. Again, probably bounce up in bond yields a little bit. Technology, generally negative. Basic materials, except for uranium. Defensives, pretty split. Natural gas, again, we talked about that breakout in natural gas. Okay, so let's also look at the futures. Grab a quick drink, we'll look at the futures in FinBiz. Just a quick reminder that you can now also trade futures in Webull, so you can hear their previous offer when they started offering futures trading in Webull, and a link to the discussion in our Discord. Okay, if we look at the futures in BinBiz, can we see that strong Dow broke out, new all-time high. See the S&P made a new all-time high, retraced just slightly. NASDAQ, again, not quite this strong, but it did break that August high. Futures did, and it looks like it's trying to gain some support right at that 20,000 level, so we'll see if that holds. Russell, again, we see that exuberant pop on the big rate cut and then slight retracement we just saw in several of the ETFs. They're pointing down right now. Nikkei bounced up a little bit. And the Bank of Japan decided to keep their rate cuts steady. So another piece of news that I posted in our Surf the Markets channel is the Bank of England maintained their interest rate at 5%, and the Bank of Japan kept their interest rate steady at around 0.25. So we didn't see further, as we'll see in the futures, we didn't see a further unraveling of the yen carry trade, so the yen back down, Nikkei up a little bit. European stocks, so the DAX had made a new high, and then retraced. Euros didn't quite break its August high, retraced a little bit. I'm going to talk in more detail about the curve, futures curve of the VIX in a few minutes. I thought it was, I was a little questioning why the VIX futures ETFs were down when the VIX was up on Wednesday after the first big rate cut. So I found a resource where we can look at that VIX curve. So we'll talk about that in a little bit more detail. But again, we didn't see a real strong pop in the VIX futures, even though the VIX itself did pop up a little bit. And it's now back at, again, 1 point it dropped below 16. I think then it regained that 16 level. And as we'll see also in that chart, we can track the current VIX relative to the VIX futures curve. So hopefully that helps as well. And we saw oil regain that 70 level, and we'll see if that holds as support or if it breaks back down below 70. Natural gas again broke above that 240 resistance level. Again, we'll see if that holds. If so, it could continue to trend up for quite some ways. So if it does continue to trend up, nice opportunity for a swing in natural gas. And again, we've got several ETFs, leveraged or not, in our ETF Google Sheet for longing or shorting natural gas. And gold's just been a beast. It broke above 2,600. Now it's approaching, testing 2,650. So we can see it goes through these trends of consolidation at a whole number of resistance level, 2,600, did the same thing at 25, at 2,550. So we'll see if it surges up to 2,650 and then consolidates there. Silver broke above 31, so may go retest 32. Palladium looks like it's consolidating. Platinum consolidating a bit. Copper was uptrending. Looks like it's getting resistance at about 440. Corn rolled over. Oats had rolled over. Wheat rolled over. So we see wheat essentially tested that 600 level, retraced. Little support at 580, broke down below that. So we'll see if it retraces this 560 level. That breaks down further potential downside in wheat. Sugar, again, beast. We've got the cane ETF in our ETFs Google Sheet if you happen to catch that surge in sugar. Then we have the bond prices, again, inverse to the bond yields. And again, I was a bit surprised that given the big rate cut, we had an increase in bond yields, decrease in bond prices. I'm not sure what they were pricing in. Since we got a bigger rate cut than what, well, the probabilities we looked at were 50-50, but we got that big rate cut and yields went up and prices went down. So we'll see if we get a correction to the upside in bond prices. Again, possibly just restructuring of the yield curve, lower on the short end, higher on the long end in terms of yields. The USD had reclaimed 101. Now it's sitting right at about 100, and strengthen the pound on their interest rate cut. Little strength in the euro and yen. The Bank of Japan holding their interest rates, so no further unraveling right now of that yen carry trade. So the yen decline looks like it's filling that gap, possibly get support there. So I hope that all helps. Welcome aboard and be free. Thank you for joining us. Hope you had a great trading week and are doing well. Okay. Grab a quick drink and we'll talk about ETFs. Again, I've got a couple tools I want to share with you. Just a quick reminder as we identify opportunities, trade ideas, etc. And we jump over to our ETFs Google Sheet and we can identify ETFs that we can use with whatever leverage, risk reward profile, etc. that we'd like to trade that trade idea, be it a long or short on a commodity index, thematic, etc. And you can get 24/7 access to our ETFs Google Sheet. Do the same thing. Identify ETFs to trade your trade idea with whatever leverage, risk reward profile you'd like using our ETFs Google Sheet. So if anyone in the chat also wants to look at specific ETFs, I'll try to keep an eye out on the chat. But I did want to cover a few new tools with you all as well. So grab a drink and we'll talk about those. Okay, so a couple enhancements that I made to our ETFs Google Sheet with some new tools that hopefully will also help you make money trading, help you see different aspects of the markets, etc. is in the screener sheet in both of our, I also added these links to these tools in the screener sheet of our ETFs Google Sheet and the screener sheet of our Watchlist Google Sheet. So the first is I've for a while wanted to identify a free resource where we could see ETF inflows and outflows. So I found a tool, TradingView, that has some pages with the ETFs with the largest inflows and the largest outflows. So again, you can also find these links in the screener sheet of our ETFs Google Sheet at the bottom. I've added all three of these. Here's the ETFs with largest inflows, outflows, also the VIX futures term structure that I want to show you. So if we look at the ETFs with the largest inflows, there's a long list of these, but if you hover over them, you can see the definition of these. So these are the ones with the largest inflows. So money is flowing into these, so positive sentiment in these. If we go down the list a little bit, we see some of the most popular is BOO, BTI. Here's a core S&P, so money flowing into the basic S&P. There's SPY, so VOO, VTI. VTI is an international broad, so a lot of money flowing into there. TLT, that would be expected as well. So again, you can go through the list and see where money is flowing into. Also, it's very interesting to see where money is flowing out of. So another link to the largest outflows. You see out of Euro, looks like out of EM, emerging markets. So again, you can out of TQQQ. So again, So into SQQQ, out of TQQQ. So again, out of technology, out of the NASDAQ, into the SPY. So again, hopefully this will help you also see sector rotate into tips, see sector rotations, changes of sentiment in the market by seeing where money is flowing into and out of ETFs. So again, you can also always access these in the screener sheets of our ETFs and Watchlist Google Sheet. The other one I wanted to share with you that's also in the screener sheet of our Google Sheets, and I also added it under reference links on our homepage. So this one I found very useful. So homepage beachbumtrading.com, bum without the U. You go down to reference links. I added this VIX futures term structure also there. So again, on Wednesday, I was watching the VIX and UVXY, and I noticed that the VIX was up and UVXY was down. And so I was wondering why that was the case. And I thought maybe it was the role of the futures as UVXY covers 2 months worth of futures, as you can see in its definition. So I thought maybe it was the roll from month 1 to month 2 that was bringing UVXY down while the VIX was going up. Just a quick note, Brent Asakaw is channel is Volatility Trading Strategies. He has all kinds of good videos on how these various volatility ETFs work, various volatility trading strategies, etc. And again, he does a good job of explaining how this role of futures in the ETFs like UVXY, SVXY works and how that has an impact on the pricing of these ETFs. So I wanted to see if I could find a futures term structure, a futures structure to see, that potential roll from month 1 to month 2. So I found this site at VIX Central. And I again put links in the notes and in our reference links on our homepage, etc. So again, I thought this was very helpful, and I've been watching this the past several days. So again, we could see the future months of the VIX futures. So we can see right now it's in backwardation, which means future months are lower than the current month. And then once we get to January, it trends back upwards. And we see the current VIX drop down to 16. On Wednesday, the actual VIX was in the 18s, and this curve was below the actual VIX. And this backwardation was even significantly steeper. So November, December were much lower than October. So in my humble opinion, that was explaining the decline in UVXY, even though the VIX was going up. So again, each day, the UVXY, etc., they roll some percentage from month 1 to month 2. So month 1 would have been September, and month 2 would have been October. And now we're doing October, November. So significant flattening in this curve the past 2 days. And again, then the VIX dropped below that. So it looks like, there's, as Easy Mike's been saying, VIX futures are still relatively cheap. Right now it's saying cheap until December. Again, I find that a little surprising. I would expect a higher projected volatility going into and around the election. That's not currently the case. So right now they're projecting a pickup in volatility in January. So again, I find this site very useful. So I've added it in a number of places and keeping an eye on that VIX futures term structure. So, and if you want to play volatility, we've got a number of ETFs in our Google Sheet. And if you go down to volatility, you can see UVXY, SVXY, which is the short. Go down to VIX. So we've got dividend payer, VXX, etc. So different term structures, different definitions, but different ways you can trade volatility. So I hope that all helps. Just while I'm sitting here, you can see, wheat. We've got a long on wheat. We got stopped out of that. I think it was last week. Made some profit in there. We've got ETFs long and short the yen. So leverage long and short, long YCL, short YCS. Gold, we've talked about gold and silver quite a bit. We've got ETFs long and short gold and silver, GDXU long, GDXD short, etc. Silver, AGQ long, CSL short, etc. Solar, sugar, again, there's that cane, some, surge. So if you happen to catch that upsurge in sugar with cane, good opportunity there. Transports right now, all I've got is long, various bond ETFs, single stock ETFs, again, uranium, several options, URA. You already saw strong performance in all three of those. Also, last week, again, we talked about URAX. So you can do a find in the research tab also for a topic. There's also a couple for nuclear energy. So nuke, MLR. Again, there's URAX, so a leveraged on URA. So again, if you want to, look at these, they pop nicely on Friday, again, related to nuclear energy. We talked about those, done some videos on those as well. Yeah, we can talk about CCJ probably tomorrow if you want to look at that, individual stocks in the uranium sector. It's very quickly to natural gas. Again, we've got leverage like Boyle or UNG, UNL, etc. Short with cold. So again, we've also got single stock and single stock leverage, long and shorts in our ETFs Google sheet. So you can do a find on any of the pages for those as well. Let me jump ahead and to our strategy for this week. I did add some in the research tab, kind of running out of time today. So I may come back tomorrow and go through a detailed look at these. But if you want to look at them in advance, I found some leverage long and shorts on the airline industry and the auto industry that I thought might be potentially helpful. So again, given consideration of time today, might come back to those either tomorrow or next week. So I'm gonna grab a quick drink and then we'll talk about further talk about our trade ideas, trade strategies for this week. So again, our theme for this week is how to make money trading and the fallout from the first big rate cut. And we've been preparing and talking about this for quite some time. So even, I think it goes back to February or so. We've done several videos on how to make money trading when the Fed starts cutting rates. So hopefully you all were well positioned, well prepared for, at least a rate cut. We got a surprisingly big rate cut. So hopefully, again, you were able to benefit from our previous discussions on how to make money when the Fed starts cutting rates. So you can hear those previous discussions, see the sectors that we talked about how to make money when the Fed starts cutting rates via the links to those previous videos. So, pretty much talked about the sectors that are going to benefit from rate cuts, things like utilities, real estate, etc. Also, growth stocks, again, with lower interest rates, future cash flows become more valuable. Small caps, obviously, they have, particularly if they have high debt, opportunity as rates come down and refinance some of their debt, particularly at a lower rate if they had to borrow money in the past 2 years. So again, small caps, growth stocks, real estate, etc., biotechs, again, big money losing companies that rely on debt. So again, we've talked about all of those in the past, and all of those should continue to benefit. Again, it was a little surprising, the negative reaction in utilities, but again, utilities had been pretty high, and we saw a rebound on Friday. So again, the Fed's going to keep cutting rates. We expect 50 basis points more through the end of the year, so that rate curve's going to trend down. So those sectors should see, getting further benefit going forward, further inflows again into real estate, growth stocks, small caps, etc., and rotations out of defensives. And bond yield should go down, bond prices should go up. So again, that was a little surprising this week as well. So if you have further ideas of sectors, groups, industries, we talked about home builders, the housing industry benefits, mortgages drop, and the housing industry benefits. There's a lot of ancillary industries that benefit when people buy new homes or remodel homes, HELOCs. Interest rates should come down, so further borrowing and possibly remodeling, etc., homes. So again, we've talked about all those again in the past, so we'd love to hear your further ideas on sectors, companies that will benefit from the Fed cutting rates going forward. We're wrapping up September, so again, we saw, typically September's a negative month. This September's been positive so far, and the rate cut should, continue to buoy up the market. So maybe we'll end September green unless there's some panic over some of the economic data coming out this week, and then we'll roll into October. I added the videos about how to make money trading in the fall to our notes, so you can start to listen to those, how the markets typically perform in the fall, sectors and industries for the fall, so you can start positioning your portfolios, your trading for the fall. We'll probably go into more detail on trading in the fall next week. Again, we saw pretty significant sector rotations after this rate cut. Again, a pretty violent reaction on whipsaw on Wednesday. Then we saw a pretty exuberant reaction on Thursday, and then a dampening on Friday. So we'll see which way the wind blows come Monday. So I hope that all helps. Again, tomorrow I'll try to talk about those additional ETFs and any other individual stocks that people have mentioned. If you do have an individual stock you want to look at tomorrow, or comments on what we can do to improve our weekly trading game plans, any of our other tools, resources, community, etc., please put those in the comments to any of our videos, or tag us in our Discord. Again, our Discord's free to join. For BeachBum Trading, all lowercase, no other characters, symbols. Looks like I've got one imposter to get rid of after this. So again, anyone else is an imposter, and we wouldn't send you a friend request or request for money or anything without notifying you in advance. So please ignore and report anyone else trying to impersonate us. So again, please let us know what we can do to improve our weekly trading game plans, any of our tools, resources, community, etc. Again, tomorrow we'll use all of this data, all these strategies, etc., to select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list, and also we'll talk about how we can use dividend paying strategies and several option strategies to also generate income while we wait for our top swing trading stocks to set up. So thank you again to everyone that joined us in the chat today, everybody that's watching after the fact. Well, hopefully you'll come back and join us tomorrow, Sundays, 10 a.m. Eastern Time, for part 2 of our weekly trading game plan, where again we'll be selecting and talking about individual stocks and our top swing trading stocks to watch list. So thank you again and have a great day.